Good evening to my brilliant professor, Professor Philanver M. Tunog. Pleasant and wonderful day to you, sir, while you are watching my video recording. This is about conceptual framework and accounting standards. Submitted by yours truly, Elena B. Ayento, BSE1, submitted to Philanver M. Tunog. Ideas and analysis on conceptual frameworks and accounting standards. The conceptual framework for financial reporting is a set of principles that guide financial reporting. Both public and private companies use the framework around the world. The conceptual framework helps to promote consistent and comparable financial reporting across different countries. It also provides a common platform for preparers, auditors, and financial statement users to understand a company's balance sheet, income statement, and cash flows. An essential purpose of the framework is to assess various accounting standards boards in different countries and developing and revising individual accounting standards. Therefore, the concepts underpinning any specific standard should generally be consistent with those outlined in the framework. The framework does not dictate how specific transactions and events should be accounted for. Instead, it guides the recognition, measurement, and disclosure of information in financial statement. Why do we need conceptual framework in accounting? Conceptual framework provides a structure for developing accounting standards, explaining fundamental accounting practices, and solving accounting disputes. Without a conceptual framework, it would be difficult to determine whether certain account practices are appropriate or not. The primary benefits of conceptual frameworks in accounting are: provides a structure within which accounting standards can be made and evaluated, guides on how to measure and report economic events, helps to compare financial reporting on different companies, helps to resolve disputes about accounting treatments, provides a common language platform between accountants and user of financial information, helps preparers to develop consistent accounting policies for areas that are not covered by an accounting standards, digital currency, or where there is a choice of accounting policy. What are the key difference between the framework and accounting standard? Conceptual frameworks and accounting standards serve the different purposes. Conceptual frameworks list the objectives, accounting principles, and the harmonization of the accounting standards. Accounting standards, on the other hand, address the problem that needs to be solved, outline the treatment, accounting, and disclosure of financial transaction. Some of the key differences are: rules versus guideline. Conceptual frameworks provide broad guidelines for financial statement preparation, while accounting standards are more specific. A conceptual framework guidelines how to apply accounting principles to create meaningful and useful financial statements. On the other hand, an accounting standard is a specific rule or set of rules mandated when preparing financial statements. Flexibility. The conceptual framework is more flexible than the accounting standards. Accounting standards are rigid and promote consistency and accounting, which more be difficult in some circumstances. Transparency versus compliance. The conceptual framework promotes transparency and comparability and financial statements. At the same time, the accounting standards are intended to ensure accuracy and compliance. A conceptual framework does not override the provision of any specific accounting standards. In short, in a conceptual framework is a broad set of guidelines that provides direction for financial statement preparation. Accounting standards are more specific rules that mandate how to certain transactions should be reflected in financial statement. So, thank you for patiently waiting my video recording, sir. Have a nice day.